Hello everyone, Dan O'Brien here with Target Trading Academy. So in these yellow boxes, what we have here is an area that is boxed off in yellow, and down here as well in this algorithm in yellow. Let me start with this algo down here on the bottom. This is what we call a regime switching algorithm. It will tell us which regime is the market in on a mathematical basis. Is it mean reverting down in the red, or in other words choppy? Or is it moving up into the high volatility zone, the green, which would mean it's switched regimes to a trend. And the dividing line is the white line here. And so when it was down below the white line and in the red, now excuse me, the yellow is covering the red, but you can imagine it goes straight back to infinity on the left. And it was down here in the mean reversion zone, and that same area is blocked off on the price bars, which was choppy, mean reversion, mean reversion, mean reversion. But a separate independent algorithm, the blue dash line and the white dash line, represent high frequency traders. Now they were selling the market, and the market was standing still here, and I joked with a friend of mine earlier today, and I said, well, I wonder what was keeping the market up. Well, we have to assume it was someone. If it wasn't the HFT traders, it had to be maybe hedge funds and maybe Robinhood traders. We got a good laugh out of that because they're generally new traders, and when you're going against the high frequency traders, guys with the really big bucks, most of the time it's not going to work out well. And the short-term informed traders came off the sell side and decided, no, there's no upside momentum. They came right back down, 75% bearish, dark red line 90% bearish, and that's where the red ellipse comes in. That equates to where it is really bearish on the HFT side, and the independent trending or non-trending algo is saying, uh-oh, now if you're a trend trader, look out, this should be trending. And based on the HFTs where they're at, now at 95% bearish, we would assume that the market would go down. The orange lines here with the purple in the middle is a machine learning algorithm that's predicting the future of the market. And as you can see, it predicted negative all the way down, correctly predicting the range of each bar, except for 1 and 2. The rest of them were all bearish. Okay. So then the trending algo goes up to the top of the green zone, which usually means the majority of that move is over. And if it's a rare one that keeps on going like it did, you want to really tighten up that stop. And if you made it super tight, you'd be out down here as it finally made a fairly big move up. But the reason why we have these blue ellipses here is that when the regime switching algo crossed back through the white line back into the chop zone, that would be probably your best exit. Because if it's no longer trending, it's going to have the regular auction process back and forth, back and forth. In other words, choppy. And in fact, it may actually be turning directions altogether, so you don't want to be short any longer. What we have here is the blue dash line, the short-term informed traders getting out of their short positions and even trying to drive the market back up. And so this was a wonderful example here today. We don't see them like this in the room every day because their volatility isn't as large as like this every day. But when the vol is up, this is, it's something that we do see rather often. So if you'd like to learn more about it or actually see it in action in the trading room, please contact our associates at the right here on Facebook and get a free trial to the room. I hope to see you there. Take care. And as always, trade well.